You're obviously here for the at-fault side of auto insurance, so let's dig right into it. Let's start first with auto liability coverage. The most important part of your at-fault state insurance policy, it's the part that is required by law to have some coverage limits for auto liability. Depends on the state you live in, what the coverage limits are that are required. But it's the part that's required and really the most important part of your auto insurance liability coverage. There are two different kinds of coverage you'll find on the liability side of your auto coverage. The first is bodily injury. So if you're in an accident, the accident is your fault and other people in other cars are injured. This bodily injury coverage is where the coverage comes from in your insurance policy. So this is, if you're at fault in an accident, this covers injuries of the other parties up to your liability limits, and that's why it's so important to have solid liability limits when you have injuries in a situation where you're at fault. The other kind of coverage for your auto liability is property damage. You crashed into their car, you smashed their bumper. We need to fix that, and we're going to take care of that for that person with the property damage portion of your auto liability coverage. If you are at fault in an accident, this covers damage to the property of others, usually their cars. Okay, so you got those two different kinds of coverage. You got the bodily injury and property damage. Makes sense, right? If you're at fault in an accident, those are the two things that you're going to need to cover for other people. There's two ways to set up the limits of that coverage. The most common way that people do it is called split limit coverage, and it breaks those two coverages into three different parts. So the first one is bodily injury to one person. How much coverage do you have for injuries to one single person in an accident? The second is bodily injury for the whole accident, so more than one people, everything all together. And finally is the property damage, like we talked about, the coverage limit for property damage you did to other people's cars. In this example, bodily injury to one person is $100,000 of coverage. So if someone has up to $100,000 of injuries in an accident that you're at fault, your insurance company is going to pay. If the injuries go beyond $100,000, then you're going to have to pay that additional amount out of your pocket. But you have bodily injury coverage for the whole accident for $300,000. So there could be multiple people injured in an accident, and your policy is going to cover up to $300,000 altogether. So $100,000 per person, $300,000 altogether. That's just this example. Your coverage limits may well be different, and hopefully you're looking at your policy right now and you can tell the difference there. And finally, property damage coverage for damage to other people's cars. $100,000 is a solid limit. Unless you're smashing a bunch of Lamborghinis or something like that, $100,000 should take care of you in an accident where you're at fault. So in this example, we have split limit coverage of $100,000 per person for injuries, $300,000 for the whole accident for bodily injury, and $100,000 for property damage coverage. That would commonly be referred to as 100, 300, 100. So, sometimes you'll hear your insurance agent say, oh, you've got 100, 300, 100, and you're like, what? I have no idea what that means. What they're saying is your split limit liability coverage is $100,000 per person, $300,000 for the whole accident, and $100,000 for property damage. So let me pull up this deck page, just an example deck page, and hopefully you're looking at yours as well. But right here at the top of the deck page, you can see bodily injury, and then we've got $100,000 per person, $300,000 each accident. So it's the same amount as this particular example. And property damage, you've got $100,000 each accident. So these three pieces are the very top piece of the declarations page for this example auto policy, and they're probably the very top part of your policy as well as you look at it. Okay, so split limit coverage. I said there were two different ways. That's one of them. The next one is called a combined limit. And this simply means that for those three different things, bodily injury to each person, for the whole accident, and property damage for the accident, we're just going to have one number to work with. So we've got bodily injury to a person, bodily injury for the whole accident, property damage. In this example, we have $300,000 available to us for all three. So my question to you would be, which one is better? Split limit coverage of 100, 300, 100, or combined limit of 300 combined, they would say CSL, or combined single limit. So $300,000 is the most the insurance company will pay out, but it doesn't define these different parts. And the example, or the answer to which one is better, is it depends. If there were no injuries in an accident, but you smashed up some Lamborghinis, then having $300,000 combined single limit is going to work great for you, because had you had the split limit, you may have run out of coverage. But if you think about the way the split limit is set up, it actually has more total coverage for you. So it really depends. Different people like to do it different ways. I think combined single limit makes it simple. You know exactly how much is available, and it's flexible. But split limit is, the more common way to do it, so it's very clear what coverage applies to what different kinds of things that could happen. So that example I just used was 300 CSL would be how it would be kind of referred to. So is your policy combined or split limit coverage? Take a look at it right now, and feel free to share it in the comments here, or go over to that Facebook page and talk about your liability coverage. Okay. Let's move on to uninsured motorist coverage. So this is actually liability coverage, but it's like reverse liability coverage. So uninsured motorists make up, a whole lot of the drivers out on the road, and we want to have coverage for if someone hits us, we are injured, our car is damaged, and we find out they don't have any insurance coverage. We definitely don't want to have to deal with that out of our own pocket. So uninsured motorist coverage is incredibly important, and it's reverse liability. We essentially create a liability policy for ourselves on our own policy. So it becomes a liability policy for injuries to you and your family if the at-fault party does not have insurance. So you definitely want to have uninsured motorist coverage. In the United States, an average of 16% of drivers are driving without insurance. And, I hear this story all the time when I have a claim and it's the other person's fault, and we're trying to, get that person's insurance policy to pay out. And I call the insurance company, and the insurance company says, well, they don't have coverage. They didn't pay their bill, or, whatever it is. There's no coverage there for the at-fault driver. Now, that person is in a world of hurt and has a lot of problems for themselves, but you're in a little bit of hurt as well if you don't have uninsured motorist coverage. And so I always encourage folks to keep that uninsured motorist coverage on. A lot of states will let you take it off if you want to. It's not required by law, but I just don't see any reason to have it taken off of your policy. Now, something else you may not know as much about is underinsured motorist coverage. This one's a little harder to understand. So underinsured motorist coverage is still the reverse liability. It works the exact same way. But in this case, the other person did have insurance. They just didn't have enough. So they didn't have high enough coverage limits on their liability policy. So here's an example. You're in an accident. You're hurt. The other person has insurance. Great. So their insurance is covering, but they have, in Indiana, the state minimum is $25,000 of coverage per person for bodily injury. You have serious injuries and you have to be in the hospital for, even a few weeks. The cost of your hospital visit is $75,000. Their insurance policy has 25. Well, that's some elementary math. What's the difference there? We don't have. We've got $50,000 of coverage that is not there on the other person's insurance policy. Their policy is going to pay up to the $25,000 that there was their liability limit, and is going to stop. So you need underinsured motorist coverage to protect you in that situation. That extra $50,000 of coverage. So it becomes a liability policy for injuries to you and your family if the at-fault party doesn't have enough insurance, just like I described there. In most states, minimum liability limits required by law are between $15,000 and $30,000 per injured person. It doesn't take a rocket scientist to realize that money can run out really quickly, and having uninsured motorist coverage is absolutely what's going to help you there. Okay, so now we come across the first coverage that is actually not really liability coverage, and it's not really property coverage either. I said there were a few exceptions. In auto medical payments, it's under the auto liability thing I have here on the video, but it is not really a liability coverage. Medical payments is the limited amount of coverage that actually exists in your auto policy to pay for your injuries in an at-fault accident. So I talked about the injuries to others, but I never talked about you or your family and where that coverage comes from. And that coverage comes from medical payments. So it's medical coverage for you and your family in an at-fault accident. It's the only coverage in your policy for injuries to you and your family in an at-fault accident. And it is oftentimes very, very low. $5,000, $10,000. People don't generally keep more than $10,000 of coverage. And so you ask why? Well, there's a mix of reasons. One is that oftentimes your health insurance coverage will come into play as a part of paying for your injuries in an at-fault accident. That's the major player in why medical payments stays so low. So you should definitely talk with your insurance agent about how medical payments work and what is the right amount of coverage for you. Okay, let's talk about coverage for your car. It's really the last major thing that we haven't talked about. So we talked about coverage for other people's car, but what about your own car? You're in an at-fault accident and your car is damaged. You need that to be fixed. Well, there's two coverages that we'll provide. The first is collision coverage. And collision coverage covers for your car in an at-fault accident and usually has a deductible. So you may have a $500 deductible. It's very common. So you would pay the first $500 to fix your own car, and then your insurance company would pay for the rest. So that's coverage for your own car. The other kind is called two different things other than collision, or sometimes it's called comprehensive. So this is also coverage for your own car, but as other than collision alludes to, it is coverage for your car when weird other things damage it. So if you ever watch commercials during sporting events and they have all these weird things, are you covered for this? Are you covered for that? Something blowing up in the back of your car, or a tree limb falling on your car, or, a fire happening in your car. These are covered under other than collision. So this is coverage for your own vehicle. If it's not a regular collision, a regular accident, it's kind of the weird stuff. Has a deductible oftentimes as well. Other than collision coverage is often less expensive than collision, and so it is possible to make this deductible lower than your collision deductible without having huge costs associated with it. So what I do for a lot of people is I'll have an other than collision deductible of $250 and a collision deductible of $500 because the cost makes sense that way. Other than collision just isn't as expensive as collision. At least it isn't at this time. You'll have to talk with your insurance agent about how that actually works in your town. So those are the two coverages that are for your own car. Interestingly enough, when people talk about full coverage, do you have full coverage? People say that all the time. What they're actually asking is, do you have comprehensive and collision coverage on your policy? Those two coverages are the coverage for your own vehicle, and that is what makes up quote unquote full coverage, with that combined with your liability, your bodily injury and property damage liability, and your uninsured and underinsured motorist coverage. So there are really three parts of your auto policy: your liability coverage, your uninsured and underinsured motorist coverage, and then coverage for your own stuff and your own injuries, which is medical payments, collision, and other than collision. So those three different parts. There are extras, though. There are plenty of extras, and there's all different kinds of extras. I'll just mention a few here, some of the most important extras. The first one is rental coverage. This is coverage. People get confused about this all the time. We are not going to pay for you to get a rental car if your car breaks down and it's in the shop for a while. We will pay for a rental car for the period of time it is out of commission after a covered accident. Sometimes this is called transportation expenses, but that is rental coverage for a rental car in the case of a covered accident. And it really makes a lot of sense because your car can be out of commission for 2 weeks, a month. It just depends on the situation. You want to be able to have a vehicle to travel around with. So it's a great coverage to have. More and more auto insurance companies are providing roadside assistance, and it is a really great coverage to have. You always want to find out, though, is it real or is it the reimbursement model? So some companies, the ones that do this better, have an actual program where they'll call a tow company that's local to wherever you are, usually in North America, and that tow company will come out, and that tow company will take care of towing you to the closest town or whatever, and they'll just have you sign something, and then the tow company will bill the insurance company, and you don't ever have to deal with it. That's the nice way. The reimbursement model is, they'll reimburse you, but they're not going to call the tow company for you, and they're not going to pay the tow company at first for you. You're going to have to do all that stuff for yourself. But then when you have a receipt, you can send it in. Send it into your insurance company, and they'll reimburse you for it. So in my opinion, that's a much lesser of roadside assistance than actually just being able to sign a document and not have to deal with the money, not have to deal with getting reimbursed. So definitely check that out and see what your insurance policy has. Another one is called gap coverage or loan lease coverage. If you buy a new vehicle or a newer vehicle, oftentimes they will offer you gap coverage, and you can usually get that through your insurance policy as well. Sometimes they offer it at the dealership too. But in the case of you having a total loss on your vehicle, if the payout in the claim is less than the loan you have on the car, gap coverage will cover the difference. So the way payouts go in a totaled vehicle situation is they will pay out a certain amount that's set by the age and miles on the car and things of that nature, sort of like a trade-in value. And a lot of times, especially if you get in a bad accident early on in a new car situation, your loan is going to be for more than you would get from the insurance company. So gap coverage is going to save you on that difference, and it could be thousands of dollars. That's the difference there. New car replacement. I see commercials about this all the time. New car replacement replaces your car with a model year younger. Now that's super nice, and essentially what they're doing is they're giving you more money than what I just described in the totaled payout that gap coverage can protect you from. And that's great if you have an accident early in your car ownership. And it's great if it's free. If your insurance company offers you that as just a part of the package that comes with the policy, okay, that's awesome. That's great. But a lot of times they'll charge you for this. And if you really look at the cost associated with the chance of this doing good for you, it's not as great as you think. So just check in. And if it's thrown in as a part of your policy, awesome. I think that's great. If you have to pay for it, I would want to know exactly how much you're paying and whether it's worth it or not. A lot of times I think it isn't worth it. Okay, so let's get on to our rookie mistake here. Your rookie mistake is driving like a maniac. Okay, well, that's not rocket science exactly, but you have to know that your insurance prices are absolutely affected by tickets, accident, how old you are, and your credit. These are the biggest players in your auto price. And so if you're driving like a maniac, you're going to see increase in premium when you get those tickets, when you get those accidents, that kind of stuff. And get older, you don't have a lot of control over that, I guess. But yeah, get older, drive safe, and pay your bills. Your credit has tons to do with your insurance. And whether we like that or not, it's a reality. And so we want to make sure that we've got solid credit, that we're driving safely. Your age you can't do much about, but those other things you definitely can do. So rookie mistake, driving like a maniac and being young, but nothing really you can do about that. All right, what did we learn here today? We broke down your auto policy. Man, we dug into it. If you stuck with me from beginning to end, you're a total trooper, and you're incredibly intelligent about your auto policy right now. I hope your brain is just exploding with new information and new ideas and just feeling like, oh my gosh, I understand my auto policy in a way I never knew that I could, and just the feeling of peace of mind that I know that provides for you right now. I'm super proud of you for sticking with this all the way through. So we learned about your policy. We first dug into what are at-fault states versus no-fault states, why those are different and why they're set up the way they are. Uninsured or underinsured motorist coverage we talked about, and then we talked about your auto property coverage and your auto liability coverage. So what are the coverages that are for your stuff, Your car generally is your stuff in the auto situation, and what are the coverages for liability, other people's cars, other people's bodily injury in an accident. And then we added in medical payments, which doesn't really fall into either of those two things. It is coverage for you and your family if you are injured in an accident. And then we added on some extras, a few extras that we talked about that are great to have on your policy. If you have to pay for them, though, some are worth it, some are not. You just want to walk through that one carefully. Okay, so what are we going to do next? Well, we've completed this first meaty policy, and there's one more to go. So the heart of our course is happening right now. We're about halfway through our course. We've completed. We're going over the hump, going to the backside of it, and we're going to move into the next video where we'll get familiar with your homeowner's insurance coverage. Homeowners policies have so much to them, and I won't dig into every single tiny little thing going on in a homeowner's policy, but I will give you a quick overview of exactly how it works. So we can look forward to that happening in our next video. And of course, as always, especially after this video, head on over to the Make Insurance Simple Facebook group. Share your questions, share your comments, share what blew you away, share what you didn't realize about your insurance policy. I would love to know, if walking away from this video, you're like, wow, my insurance policy is solid, or man, I had no idea the things that I was missing. I feel like the reason we're doing this course, the reason I'm doing this course, is to help you to understand these things and see what's missing. So if something bad happens, that you're in good shape and you're able to take care of that, and your insurance policy is going to protect you like you expect it to. So I would love to hear from you over on that Facebook group, and we can engage on that. Okay, that is the end of the auto policy. I hope you enjoyed it. I hope you're not feeling overwhelmed. I hope you're feeling the opposite of overwhelmed. You finally now can just look at this thing and understand what it is that you're covered for. And I cannot wait to do that for you for the homeowner's policy in the next video. I'll see you over there.